What's up, you guys? My name is Gaurish, and today we will be talking about the company named as Magellan Midstream Partners, which has a ticker symbol MMP. Talking about the introduction of the company, MMP is principally engaged in the transportation, storage, and distribution of refined petroleum products and crude oil. According to 2019 annual report, MMP has the refined products pipeline system, which currently stretches about 9,800 miles. To put that into perspective, it's enough pipe that if laid end to end, it could go from New York to Los Angeles more than 3 times and owns about 53 terminals, of which 25 are self-owned. This pipeline covers the central region of USA, covering about 15 states with its pipeline services going from northwestern Minnesota all the way down to Texas Gulf Coast as shown in this map. MMP earns a steady income stream by collecting fees for providing services like shipping barrels across its pipelines, storing them at its terminal sites, and providing other services like blending ethanol and other fuel additives. Thus, the often volatile price of oil and gas isn't nearly as important as the demand for oil and gas. As you can see from the map, it also has 2,200 miles of crude oil pipelines and has 35 million barrels of storage capacity. MMP also owns 6 marine terminals located along coastal waterways with a storage capacity of approximately 31 million barrels, of which 25 million barrels are self-owned. According to the Moody's credit rating services, MMP has the credit rating of Baa1, which means that it is considered as the company which has high ability to repay short-term debts and is rated as medium grade with moderate credit risk. According to Fortune 500, MMP holds the rank of 795 this year, which is better than its previous rank, which was 827. Talking about the management, Michael Mears is the chairman and CEO of this company, and he has a CEO approval rating of 65 of 100 as per Owlers, which is average. But if we look at his history in the company, he joined the company in 2003 and has been the senior vice president, COO, and presently holds the position of chairman and CEO of the company. This shows that he has climbed the ladder and has been serving MMP for about a decade. He became the chairman in 2011 when MMP's net income was in millions, and presently the net income of this company is in billions, as you can see from this chart. This growth shows that he is doing a good job. According to the recent insider trading update, Mr. Mears has bought about 66,700 units of MMP, which is worth about $4 million. This is the first positive sign according to me. Let's dig into the balance sheet now. EPS rating tells us the growth and stability of a company's earnings over the past 3 years with extra weighting on the recent 2 quarters. EPS rating is measured between 1 to 99, and an EPS rating of 99 indicates that a company's profit growth has exceeded 99% of all publicly traded companies. Stocks with EPS rating of 80 or better has the best chances of success. As per the IBD rating, MMP has the EPS rating of 92, which means that this company's profit growth exceeds about 92% of all publicly traded companies in the market. This is the second positive sign according to me. As you can see from the chart, MMP's EPS has been increasing since 2011 and presently it is 4.81. Price to earning ratio is one of the basic ways to tell if this stock is cheap or expensive. Warren Buffett and Benjamin Graham considers the stocks which has the PE ratio of less than 10, which is considered as underpriced by them. MMP has the PE ratio of 9.056, which is less than 10, and we can buy it at its present price. PEG ratio enhances the PE ratio by adding the future earnings growth in this calculation. According to well-known investor Peter Lynch, a lower PEG ratio may indicate that a stock is undervalued. Conventional wisdom says that the PEG ratio of 1 or less is considered good. Presently, the PEG ratio for MMP is 2.15 as per Zacks, but even then, after considering the present situation, I feel that this stock is undervalued right now. We will get to know more when we will calculate the intrinsic value of this stock. Now, debt to equity ratio tells us how much leverage is the company using, and hence this is also known as leverage ratio. Higher leverage ratio means higher risks to shareholders. Generally, a good debt to equity ratio is around 1 to 1.5, but this varies with various industries. MMP has the present debt to equity ratio of 1.69, as you can see from this chart, and this is acceptable as per the oil and gas industry. Debt to EBITDA ratio ratio tells us how much cash the company brings in and reveals how capable is the firm in paying off its debts and liabilities. In general terms, the ratio up to 3 is acceptable. The present debt to EBITDA ratio for MMP is 2.95 and is within our required limits. For explaining the net income, let's take an example now. Let's say if someone is working and getting a gross salary, then that salary can be said as revenue. And the amount that is left after the person has paid all his taxes and all other expenses from that gross salary is known as net income. The present net income for MMP annually is around 1 billion and has been consistently growing as seen from this chart. Return on equity tells us how much profit does the company makes with each dollar shareholder has invested. The general rule of thumb says that the companies with ROE around 15 to 20% are considered good. MMP's present ROE is 41.66% as per the chart shown. This is the third positive sign for me investing in this company. According to Guru Focus, MMP's ROE is ranked higher than 95% of the oil and gas companies present in the market. Return on asset gives us an idea of how efficient is the company's management at using its assets to generate income. Generally speaking, ROAs over 5% are considered good. Presently, MMP's ROA is 13.34% and according to Guru Focus, MMP's ROA is ranked higher than 94% of the companies in the oil and gas industry. Dividend. Dividend means the company pays its shareholders some money out of its profits or reserves just for holding their shares. As of April 2020, the current dividend payout per share for MMP is $4.11 annually with a dividend yield of 8.97%. MMP has been paying dividends consistently since 2001 and as you can see from this chart, it has been consistently growing its dividends since then. This is the last reason why I like this company. According to the recent news, MMP will begin operation of its new West Texas expansion plant, which is nearly $1 billion and which is operational from 1st of July. This project includes a new 140-mile, 20-inch diameter refined petroleum products pipeline, and it will also increase the diameter of existing pipeline on the western leg of its Texas system, which directly serves West Texas and New Mexico. The completion of the new and expanded pipeline system adds another 75,000 barrels per day of capacity for Magellan's West Texas customer. MMP is also finishing the construction of a new refined products terminal in Midland, Texas. The new facility will offer around 350,000 barrels of diesel fuel storage. Now let's calculate the intrinsic value of this stock. As you can see from this image, after considering its free cash flows and net incomes, as we calculated in the previous videos, I have calculated the intrinsic value for MMP to be around $66 and its present market price is around $44. So I think this is a great buy at this point of time. After going through the previous price charts, you can see that in February the market price for MMP was around $60 to $65 and it was around its intrinsic value at that time. So after going through all the ratios, I think that this is a great and safe stock to buy at its present price. This was my research on this stock. Please do your research before investing. Thanks for watching this video, and if you like this video, please like, share and subscribe to my channel. Thank you for watching and stay safe.